Hi, welcome to valuationpodcast.com, a podcast and video series pertaining to all things business and valuation. My name is Melissa Gregg. I'm a business valuation expert in St. Louis, Missouri. I have the pleasure to talk to Josh Lefkowitz today about estate planning and federal gift tax valuations. Josh is a partner at Cohen & Company and is also a valuation expert in Pittsburgh, Pennsylvania. Welcome, Josh. How are you?
I'm doing well, Melissa. How are you?
Good. Why do you need the valuation for the gift tax return? Do you have to attach it? Do you talk about statute of limitation? All of these types of things. What is the real purpose of it?
Yeah, so the purpose is multifaceted. If you have one done, you would attach it, right? It would be a part of your disclosure as to how you came up with the fair market value. It is not a requirement. There's only one code section that requires what's called a qualified appraisal by a qualified appraiser, and that's when you're making a donation to charity for hard to value assets or property greater than $5,000. Other than What's that?
Like artwork?
Yeah, exactly. And again, that's a whole nother topic we could go deeply into,
Right.
is dealing with this on the donation side. But in just your traditional gift situation, it's not a requirement to have a valuation, but it is best practices. You want to have this done in a professional manner, especially if you're dealing with very large gifts, right? If we're talking about somebody who has a very large estate and they're talking about gifting, I'll just make up a number, $5 million worth of stock. And it's $5 million worth of stock in a growth organization where 20 years from now, when that individual passes away, that $5 million in stock is now worth $50 million. If you don't do this the right way, that's where those things can come back around to bite you. Because if you don't do this in a proper fashion, you don't have proper disclosures, the IRS can make claims that you did it in a fraudulent fashion and that that the statute of limitations never started. Okay. Mm-hmm. So it's those kinds of things, the likelihood of a gift being challenged by the service is remote. It's on the lower end, but if you're making a sizable gift, you're spending a lot of money. You're dealing with big numbers. It's worth spending, some dollars on having a professionally prepared valuation to have everything documented in a fashion that's appropriate and, can withhold scrutiny should the day come when you face scrutiny. That's really what it's all about at that point, is can what you've done withstand challenge in the future?
Well, and I've seen some of these done even from an exit planning strategy. So a company says, we've been a family held business. Maybe in the next 5 to 10 years, we're going to sell the business for a lot of money, hopefully. Mm-hmm. Right. And so I want to get some of that wealth to the next generations that, instead of after it's all said and done, how do I get it to them? So then they would partake in that sale. And then that's really how you're avoiding some of that transfer, taxes and other types of things. And the other is that a lot of times a business owner doesn't have a clear view of the value. So just saying to the business owner, well, you're going to gift 10% of your stock. What is that worth? Oh, I think it's worth A, B, and C. It's not, you want the third party to come in and kind of vouch for that value, right?
Yeah.
A lot of time.
Yeah, 100%. And honestly, a lot of times our gift and estate planning related valuation work starts exactly in that fashion, right? We have a business owner that says, I know something is going to happen. I don't know what that something is. And I don't know what my business is worth, right? So oftentimes what we'll actually, and I'm going on a little bit of a tangent here, but I think it's a good one. A lot of times what we'll do in that process is we'll do what's called a calculation engagement. So under our professional standards, as Melissa knows, we can do a calculation engagement or evaluation engagement. Evaluation engagement is a full-blown appraisal with, everything really done on an independent basis is the easiest way of saying it. A calculation engagement is much more of a consultative type exercise. Same type of analysis, same type of valuation calculations, generally not the same depth in terms of diligence done on the company, the industry, risk factors, things like that. A lot of those are generally done through management interview.